being silly. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Here we are. It is the 1st of October, first day of Q4 2019. Back to the RationalInvestor.com's Daily Brief Recap. Yeah, that's good to see. The end of Q3, like we talked about, lots of window dressing yesterday, and through the end of the month. We're now into the new quarter, so it's going to be really interesting to watch where the fund managers are putting their money to work, and more importantly, where they're avoiding. And maybe over the coming sessions, I'll throw together the first 2 week studies from the previous quarter, and then how the full quarter did, just to get an idea of how close the fund managers were in their thinking of where we are in the economic cycle. But lots of data points to work with here today. Right out of the gate, keep in mind we actually had a stock market sell signal there back about a week or so ago. You've heard Brian talking, of course, at length about where's my crazy S&P chart? My cycle thesis. We were looking for a top here near the latter part of September, and that seems to be playing out. You can see the Dow. We've talked lots to you guys recently about what are we supposed to be thinking if we see the market smiling at us, so that seems to be playing out. Small cap stocks really can't buy a friend here. We tried to break out, and then of course on this candle here where the market was zipping higher, we got an absolute train wreck economic report out of the States today, suggesting that the economy from the manufacturing sector is quite a bit worse than what was expected. The data print, and we'll just maybe just do the important ones. The data print here, ISM manufacturing for September. Keep in mind a reading above 50 implies expansion, a reading below 50 implies contraction, and the headline number came out today, 47.8. So we got a bit of a problem happening now in the manufacturing sector, and of course you've heard Brian at length, almost ad nauseum over the past, I guess past year or so, suggesting that trade wars never end well. Usually the end result is contraction and recession. And when you actually dig into the headlines here, and I think I retweeted this out here, the manufacturers themselves are actually saying that there's two primary reasons that they're having problems right now. Number one is just in a world of uncertainty around what the future is going to be. Business never likes uncertain conditions, and they've just basically said, look, we're just going to turtle until we can figure out what the actual political situation is with regard to costs and who you can do business, who you can't do business with. The second interesting takeaway I took from this report was they also reported, too, that because our globe is, in essence, very intermeshed with this thing called supply chain economics, that a lot of parts and a lot of ingredients that go into the manufacturing of finished goods are just simply not arriving now. Everything's sort of getting all backlogged and bottlenecked. So we've got the scenario here for an economic problem, and it's now starting to show in the data points. We had a fantastic presentation today by one of our TRI OGers out of the UK. Jamie comes on about once a month or so, and we do a macro top-down fundamental analysis of the world and all the different data points, and frankly speaking, it's not a pretty picture out there. And if anything, looking at our charts, we've talked recently about U.S. dollar strength being Not really the best thing that you want to see out of the market. It implies that, international money managers, if I'm going to put my money any place, I'm going to just go and throw it in U.S. T-bills and just bury my head in the sand. U.S. dollar index did push to new highs. Interestingly enough, coming out of that report, maybe the Fed now still has interest rates in the States too high. Maybe that'll encourage them to lower rates going forward. So U.S. dollar index itself has got a bit of a pivot. I'm wondering here whether this was like a buy the rumor, sell the news kind of event. We'll keep an eye on it, but long and short of it here, this is a daily chart. We just pushed to new highs on the dailies. So, at the very best, we have to wait for maybe an inside bar reversal tomorrow and some follow through. And then, of course, off the weekly charts, I didn't want to go over there. Put that back. Off the weekly charts, we just made a new high again. Show me a new high and I'll show you a buy, all that kind of conversation. Could this be the start of an empire top here? Maybe a fractal top, but again, as the message has been of late, probably not a good idea to step in front of this thing just yet. It's going to take some time for this thing to roll over. If we turn our attention now to sort of risk on, risk off kind of conversations, with that very weak report coming out of the States today, I don't think it should surprise anybody that we're seeing risk off assets all catching a bid. Bonds have done pretty well here, and we kind of conjectured yesterday as to how those bonds were going to behave up here. They had not broken down. The yen came back down against key lows, and it's rallying smartly off those lows, so maybe it's held. It's interesting, I talked a little bit about gold and silver looking very dangerous in here. With that risk on, risk off conversation, the gold also is catching a bit of a bid here. But we've talked lots about what do you think, what you're supposed to be thinking if you see the market smiling at you, and I don't really like the look of that gold and silver market right now. It looks a little dangerous. Having said that, as you can see, stocks continue to melt lower, as well as oil. And I'm actually a bit surprised because somebody tried to jawbone the oil market up yesterday, saying things like OPEC production is at the lowest level since 2011, etc. But oil still can't find a bottom just yet. And along with stocks, this sort of risk-on kind of thinking in the marketplace has been tempered. Interesting to see how Bitcoin is acting in here. I suppose we'll talk a little bit about it in a minute or two. But kind of bucking that overall risk-on, risk-off kind of thinking in that it's catching a bit of a bid here. We'll see how that goes over the next few days. So, long and short of it here, stocks still working their way lower. I didn't get my whole short position on, but I did get half of it on, so I'm feeling relatively positive with regard to that. And it was also nice to see, in the daily brief, people like Kevin pointed out that there are actually a few sort of biotech names that are doing okay in this kind of environment, and biotech usually does okay during that kind of environment. And we'll also talk, I guess, we might as well do it now. Jamie pointed out this one stock that it's got his attention right now. Everybody should look at this chart and go, holy crap, this thing's basically gone parabolic over the past few years. 2016 lows all the way up to our 2019 highs. This hasn't broken down yet, but this is definitely something I'm going to be watching here closely, because this is a good example where sort of fundamentals meet technicals. In that, of course, Louis Vuitton, it is sort of luxury goods. If people are feeling richer, they're going to go out and buy their Louis Vuitton bags. If they're not feeling so great, maybe they'll hold off on those sort of luxury purchases. But everybody should look at this chart and just go, holy Jesus, there's quite a bit of risk involved here. If we just think about things like, and actually this was really cool how I did this today. But if we just think about things like momentum, you can see price momentum is failing here. Keep in mind, this is off a weekly price chart. If we look at value, you can see value isn't all the way to way down here back into our reload zones. If we look at price action itself, what are we supposed to be thinking if we ever see the market smiling at us? So why do technically speaking, I love the look of this thing. And I might even go hunt put options. Unfortunately, with the stock so expensive, the puts are going to be really expensive too. So I doubt there's going to be a trade there for me. But I do like this thinking, and I like the anecdote that if I understand correctly, there's a pretty big brouhaha going on with the European Union and American and European aerospace companies. And while they may be insulated to a certain degree because their contracts are so important to the economies, tertiary products like Louis Vuitton, luxury goods, the consumer sort of discretionary spending names, these things could come under pressure here. So it's just a really cool conversation. Jamie sort of pointed out that fundamentally this stock is extremely expensive. There's like something like 500 million shares out on this thing. So at $350 a share, you do the math. I mean, the market cap on this thing is ridiculous. And, with that backdrop of sort of tit for tat kind of tariffs, could a name like this actually be vulnerable going forward? And frankly speaking, I got to agree with Jamie. He's kind of thinking, these are the kind of names you want to avoid right now. And I got to agree. I mean, very dangerous situation. So it's kind of a fun sort of side conversation we had coming out of Jamie's fundamental analysis report there today. Moving our attention over to crypto. We've talked lots recently. I don't think it should be a shock to anybody. I haven't talked too much about this chart recently, but maybe we'll just make quick reference to it today. I was a little bit surprised to actually see the market lose the low of this triangle, but you notice just like the spike up above here, we actually exited the triangle, then get sucked back into it. This is more sort of that kind of conversation about how I thought that 50% levels will act as magnets, both shooting to the downside. They often overshoot, and then back to the upside. And I find it fascinating that if this is the case, then that will literally be right at the bottom of this triangle, which is what we should be expecting. That really, I wouldn't be too surprised if we actually see something along these kind of lines as we move our way through the end of this triangle. So I don't really mind the idea of guys on lower time frames hunting for some sort of counter trend rally. We've talked lots recently about how we should probably, at the very least, expect a downside, a test of this important level from the other side now. So really that doesn't surprise me a heck of a lot. When I look at things like our 50% rule on stamp over here, it's at 8,500. And we sort of talked about this recently. I really do expect just sort of an oscillation around this level. So you can start to see the makings of that. Because this was such a massive consolidation and a breakdown, my hunch is that we're way, way, way too early to say this is the bottom. We go straight up from here. And of course, whenever you go on Twitter and stuff like that, that's all you hear. If anything, what I think we're probably going to need is a few weeks to sort of digest this. My hunch is, and I don't know whether we follow the same path as this 2017-2018 correction, but my hunch is we're probably kind of like what you see here is we're going to be playing around in this trading range for the next little while. I think that makes perfect sense. The only problem that I see here is if we look at the lower time frames and we start thinking about, okay, we want to start hunting longs and stuff off the bottom here, do we have enough anecdotal evidence to actually suggest that this thing has bottomed? If we just use this recent price range, using the 12,300 area high down to this recent low, you'll notice that 50% rolls just so happen to be right at 9,900 on this Coinbase, which would make sense, considering our talk about, failure levels here. That was 95, 9,600. And then, you can see on the chart here, I've drawn 38.2s, which is what we should naturally expect on bounces. That's at 10,000, big fat round number. Could we see a push up into there? Sure. But the problem that I have here right now is that these divergences are extremely steep, which, doesn't lead me to believe that this is that solid of a bottom. I think I made reference to this recently, that if you get these sort of spikes straight off the lows here, like this, once this sort of inertia exhausts itself, then we have to come back down and test the lows. And you can see quite often here, when we do come back down and test the lows, it leads to meltdowns in price. So I'm a little bit leery about declaring bottoms. And if anything, what I kind of said there just a moment ago, if we push this, that is the 50% level off of that entire range. If we move that to 38.2s, my hunch is, notice how 38.2, 9,300 on this particular chart, just looking at this range, that is the bottom of value. It is sort of brushing up underneath the original breakdown levels from the other side. That's sort of what I'm thinking can happen here. But this is going to be choppy. And if anything, I don't like the look of this divergence. I think it's very, very steep. So if anything, and what I'm sort of saying on the site and my sort of temperament right now is, if we look at lower time frames, we can actually see that we've got divergences building in momentum. Yes, we are pushing to new highs, but the problem is our momentum indicators and oscillators are not. So a little bit concerning here from that perspective. And if anything, probably, again, there's that funny little 2-bar candle. It's interesting how the market popped up into that, then was rejected, then popped up through it. We actually drew bought setups off of this, and this move up here was actually your move stop to trailing level. And I actually think that those people that botted this out and took the longs off here, I don't have enough time to draw all those levels. I think actually they've been told to politely exit. So internally, off the lower time frames, I'm a little skeptical here. And if anything, what I would like to see for me to actually start getting super uber bullish is, I'd actually like to see the market come back down, put in a nice W here, and away we go. So, only time will tell. You just don't know in this game. But if I had a wish list of what I'd love to see happen for me to start getting uber bull, it would be something along these lines. Finish off today's offering. I thought it was just interesting. We've been watching this BNB coin very closely lately, and the correlation between BNB right now and Bitcoin itself is actually quite startling. Now, I don't know. I mean, maybe BNB is supposed to be completely Bitcoin neutral. I don't know. Fudge. I don't want to do that. But, just for illustration purposes, and it's something I'm watching closely here, the correlation between BNB and Bitcoin right now is quite shocking. So I'm not quite sure how to interpret this. You can clearly see these assets are highly correlated. But I guess what I'm just thinking here is, we have been sort of counseling about how BNB, it was a little bit early for us to get too bullish. But we've actually come down now, and we've hit technical objectives. So if we do things like AB, CD, you notice that we have actually gone beyond that harmonic objective. I don't know whether we've done reload zones here fully yet or not. But it wouldn't surprise me if we're starting to get into that range. Yep, so we're comfortably in that reload zone. Kind of like the Bitcoin chart. It's probably a little bit too early for us to call like an outright bottom. But you can definitely see that somebody's coming in here, right? If we change this to like down to like a daily or like an hourly, you can definitely see panic dump low, counter trend rally high. I love when you get M's inside bigger W's, because this actually creates like a harmonic pattern. So I am feeling more encouraged about sort of crypto and the altcoin space. And just an FYI for everybody, sort of another tell that I think we're getting close to some sort of long-term pivot here for crypto is we're actually going to do another Coinigy show. We haven't done a Coinigy show in a while. But Alex Stirk has actually turned up out of the woodwork, back from Burning Man. And he asked the other day whether we'd be interested in doing another Coinigy show. And so we're like, yeah, sure, let's go for it. So it just goes to show that, you know, when the OGers start coming back, and I see a lot of the crypto Twitter OGs are starting to filter back, it sort of tells me that we're probably closer to a bottom than a top. And, you know, we might actually be getting ready in through the end of this year. You know, I don't have time, and I probably talked way too much here today already. I don't really have time to get into it today, but I have been putting out a lot of really interesting tweets about about Saturn Pluto crosses. And it turns out that they're actually the harbinger of financial system changes as well, which I thought was really interesting. And considering the way that crypto is sort of setting itself up here, that might actually be a really big catalyst January of this year. And it would make sense because basically that would be 2 years from the top that we can actually start this frivolity all over again. So keep your eyes peeled. I think the market is trying to speak to us here, and especially if you're crypto oriented, I think we're now finally coming into the phase, you know, like if we take a look at our long-term correction sort of pictures on things like Bitcoin, we're finally coming into sort of the 8th or 9th inning of this correction, and all of your patience and discipline to keep yourself alive through this bear. I'm getting the feeling that we're in the sort of latter stages of the bear, and get ready January 2020 for Saturn Pluto cross as our catalyst. Something for you to think about there. All right. I'll leave the recap at that. Probably talked way too much, but you know Brian, he loves the sound of his own voice. So have yourselves a great day. All the best, and bye for now.